What's up, everyone? Welcome back to another episode of the 1% Club podcast. I'm your host, Tawfiq.
And I'm Andrew.
And today I'm very excited because this is our first episode in the new studio. And today we have a very special guest. We're joined by broker of record and owner of Meta Realty, Jake Steinman. Jake, thank you so much
for having
coming.
me, guys.
Welcome back to the show.
I'm super happy to be here. I'm super happy to be in the new studio. This is my first time shooting in here.
It's a
Awesome.
nice studio.
Since the last time we saw you, Meta Realty has grown quite a bit. What
Yeah.
are we at for agents-wise now?
Around like 123 or something like that.
Okay.
Yeah.
And you've had a special edition.
You?
Yeah,
Oh,
exactly.
yeah, of course. We had to break his arm to get in the door.
Really.
That's what it takes.
Yeah, Tawfiq twisted his arm.
As many of you know in the headlines as well, like in a real estate market like this, it takes a special brokerage to bring unique opportunities into the market. And today on our podcast, we wanted to actually talk about a specific opportunity that we have from our company. CMHC is a big thing in the news nowadays, right?
Yeah, I mean, for a variety of reasons. It was in the news a couple days ago. It was in the news back in September. It's becoming a huge component of people's housing affordability in a lot of ways, for sure.
So for everyone who doesn't know what CMHC is, can you tell us briefly?
Yeah, for sure. CMHC, Canadian Mortgage Housing Corporation, I'm sure most people have heard of them at least in the past, but they're a sort of federal company, non-for-profit, that's been around going back into the early 1960s. Their mandate is basically to help people get housing one way or another, and they typically do that through offering, preferential financing, preferential mortgages.
Okay, so before we were able to get insured mortgage under $1 million. Now they're changing it in December, I believe, up to 1.5 million.
Yes.
For first-time home buyers as well, they're extending the amortization to 30 years, for example.
Yes.
Instead of 25 years.
Yeah.
Yeah.
Yeah, so I guess, we can do the basic math. It makes it a lot easier for people to kind of reach their goal there and get the home they really want. So I think it's...
But do you think that actually helps affordability to increase the amortization and...
You want the honest opinion? I think in the short run, it'll make it more affordable for some buyers. But obviously, if more buyers can afford more house, then they're going to all compete and pick up more of those more expensive houses. So, it's a marketplace. Obviously, if more people can afford it, they'll drive up the price a bit.
Yeah.
So I guess in terms of pricing, if it goes up, then at the end of the day, they're just paying more interest. But in the short term, it just decreases the monthly payments.
I'd say, yeah, it's along those lines for sure, but it makes it possible for people to get housing one way or another. So is it ideal? No, the best bet I think would be if we can get more housing built, but it's better than not being able to afford a house.
It's true, yeah. In my opinion, I think the way for them to help with affordability is to make it easier to get the permits and increase more supply.
I agree.
But I feel like they keep doing other stuff that doesn't actually help, but they're pretending that they're doing something.
The government's the government, man.
So something we like to talk about on the podcast, because it's called the 1% Club for a reason. We're talking about the top 1%. We're giving advice, not advice, but like suggestions on how someone like you, an entrepreneur and investor, got to a certain point in terms of like successes in business, as well as looking at investment opportunities.
Sure.
Yesterday, we actually had a huge seminar with multiple hundreds of people showing up in our Mississauga office talking about a specific program from CMHC. Can we talk more about that MLI Select program?
Absolutely. And first off, I want to say that seminar was crazy.
It was great. We'll put some videos.
We'll cut in, I'm sure you put it in the upper corner now, but that was the biggest public speaking in my entire life. I've never spoken in front of a crowd like that before. I thought we'd have a good turnout, but that wildly exceeded my expectations. I was thinking the fire marshal was going to show up or something. So obviously people are hearing about that program, and I'll explain in a minute, but clearly there's a demand, or people are looking for opportunities to make investments, right? Because we all know, let's not beat around the bush, the housing market is challenging right now. A lot of people got burned over the last few years investing, and now they're kind of underwater, but people still need to put their money somewhere. You're not going to leave it under your mattress. You're not going to put it in a bank account where it's not making interest. So I guess one thing we've been doing at Meta that's good is we've been trying to find things that actually make sense. So in terms of that program, What a lot of people don't know about CMHC is they have a commercial lending department as well. And it's really focused, again, same mandate, get housing built or get housing available for people. So they offer really good incentives to builders in terms of how they loan money for construction to make it almost impossible to say no to building new apartment buildings, basically. So that was kind of, I guess, what the seminar was about yesterday. And clearly there's a lot of interest.
Yeah, like we won't get into too much detail about it because obviously you can reach out to us in terms of getting more into the deep stuff. But with the MLI Select program, essentially there's these builders that they want to bring more affordable rental projects to the market. Is that correct?
Yeah, high level, that's kind of it, right? So there's a lot of guys out there, I guess, that want to build apartment buildings, but it has to make sense economically. No one wants to build a building and not make money. So the CMHC program gives just really good loan terms so that it, when you run the numbers, it's beautiful, essentially.
What type of loan terms are we talking about here?
The number one piece, and I think it's like the headline item, is the 95% loan. So yeah, you heard that right. Like when you want to build a new apartment building, CMHC will do 95% construction loans, and that's all of your costs. So the cost of the land, the cost of your planners, your architect, the cost of submitting packages to the city, and then of course your hard costs of actually building the building. They will give you 95% of that cost as a loan.
Just to give people some context as well, what's the normal LTV for like a regular residential versus this program?
Yeah, so in a normal construction type lending, it's very similar to what a regular mortgage would be. It's going to be like 30 or 25%. So it's not even like it's marginally better. It's like exponential. I mean, end of the day, you end up owning an apartment building where you only need 5% down.
So that's leverage, right?
That it's not just leverage; it just makes it possible. Like because
True.
Let's just use a random example and say you had a $2 million building, a smaller building. If you had to put down 30%, that's $600,000. I mean, for a small guy that just wants to get in the game, that's not very accessible. But if for $2 million with 5% down, that's $100K. Anyone who was looking at pre-construction or whatever, or a small house in the suburbs, like $100K, they would have needed more than that. So it's literally less money to own more.
Or people can partner up as well, right?
Yeah, for sure. Absolutely. It's just like any other investment, you can do it with your friends or your partners. Obviously, pick your partners wisely, but there's nothing preventing that.
So you have the 95.5, and then what else?
Yeah,
that makes this program special.
It just gets better. So the other big item is the 50-year mortgage. And just in case people, I did not say 1-5, I said 50 years. So, we were just talking about CMHC on the regular lending offering now 30 years. Like that's a big deal. But on apartment building lending, they're doing 50 years, right? So if you think about spreading those costs out over half of a century, it really just makes the individual payments so much smaller that you can make your building cash flow positive. And obviously, if someone wants to build a rental building, they don't want to be losing money every month, right? So it's just really nice to have that.
It is really nice because I know that multiple of my rental buildings are cash flow negative.
Yeah.
And I'm sure outside of my own investments, like the people who have bought pre-construction especially, who are coming to completion now, like they're maybe, like I think you had an investor that was negative like 1,000 a month or something.
1,500. Because also it was in occupancy, so he's paying the higher interest.
Right.
But after he gets the mortgage, it will come down, but still, like he's negative cash flow.
Sure. And I think it's basically impossible if you're buying a house or a condo or even like a house with a basement unit under regular lending right now. I don't think it's possible to end up cash flow positive.
No,
Once you add up, because it's not just your mortgage, you have your property taxes, your insurance, your maintenance, everything else you need to do. If you want to have the property managed so you're not dealing with tenants at 2 a.m, you're going to be hugely negative. But with the CMHC, with that long term, it's very easy to not just be break even, but significantly positive on your cash flow.
So it's long term, lower deposit,
Yeah.
and the third thing I would say is the lower interest rate.
Yeah, so that's the other beautiful thing about them is they offer you a below prime rate. So if you actually look at like any bank where they show you their mortgage rates, you'll see typically that the insured mortgage is even cheaper than the regular mortgage. So and the same thing applies on the commercial side. So if right now you were getting a normal mortgage and it was like 4.5 or something like that, you'd be looking at an insured mortgage like 3.75, 3.8. So not only is you getting this long term, and as you said, and the very low deposit, but you're getting better interest rate than you can get anywhere. And if you're familiar at all with construction financing, Normally, to build something, you'd be well above a normal interest rate, maybe 3 or 4% higher. So it really makes it attractive.
And all these things help with positive cash flow.
Exactly.
That one makes it possible.
Exactly. It's the combination of those three items that when you look at it, you go, oh my goodness, the mortgage is way less than the operating income of the building.
Yeah.
And the thing is, the cash flow aspect of it, we're not just talking about a couple $100 because these are multi-family units. Like we're talking quite a bit more than that.
Yeah.
Minimum 5 units.
Yeah. So CMHC, they're not. This is a program for commercial lending, so they minimum is 5 units. There's no maximum. I'd say most of the projects we see are coming around are more like at least 10 units, just because you get some efficiencies building a slightly bigger building. But you got to think about how, again, going back to my example, a 10-unit building that's $3 million, you only need $150,000, and you own a 10-unit building.
Yeah, crazy.
You know, and you're cash flowing healthy numbers, a couple $1,000s a month after paying your mortgage and everything else. It's an impressive program for sure.
And would you say this is how a lot of people made their wealth through real estate? Because like for the regular person to buy a house, they're not going to be wealthy from that one house or one condo.
100%. I think that's kind of the way I say it is, we've all been selling pre-construction for a long time, and I'm sure when we're all great salespeople, we always ask people why they're buying, why they're interested, and you always hear the same sort of story. I'm interested in downsizing, or I'm interested in a place for my kid when they go to school, or a small nest egg for the future. When they're buying that condo, they're not thinking I'm trying to build wealth. They're still thinking I'm gonna have my day job. I'm putting away a little money for the future. Because with one unit, how much can you do, right? But when you buy one of these big buildings like this, and you're putting in so little of your own money, and it's going up in value and bringing in cash flow, you can take that money and you can put it to work multiple times over, and over a 5 or 10 year period, you can end up owning multiple of these properties, and then now you're looking at wealth, right? Like, it's a total mindset change, I think.
And this program is also, it's not brand new. It's just been changed over time. But I think you've mentioned that back in like the 90s or something, like builders were using it to like make rental buildings.
Yeah, so actually it's way even older than that. They've had variations of this going back to the 60s. I don't think it was quite as sweet in the 60s. It was like a 10% deposit. But if you look at in Toronto, you look around and there's those older buildings. Most of them are like 10 to 20 stories. A lot of them are like long and skinny, or they're kind of like 3-sided. Most of those were built with this program, because again, why would you use all your own money when you can get this, leverage? And yeah, I mean, if you ask any of those guys that built those buildings 40 or 50 years ago with 10% deposit, like, they're laughing pretty happy now, right?
Yeah, I think like some of the big developers nowadays that are making pre-construction condos that people are buying, they're landlords themselves. They own rental apartment buildings. That's how they made their money.
For sure, 100%. I won't name names, but I was at a dinner a couple weeks ago with a big builder that we've previously sold many units pre-construction, and they're currently building 2 of these. One is a 300 unit and one is a 90 unit building for themselves.
Nice. And then for someone to say, how can I manage all these units? So you guys take care of all of that, from acquiring the land.
Yeah, so there's a whole bunch of different steps and stuff involved in that, but essentially the key part of that management side is that these buildings get properly property managed, right? Because that's another issue you'll have with the guy who owns a single condo or a townhouse is, I'm not trying to speak negatively of them, but like a lot of the time they won't properly take care of the property. Yeah. It gets in a rough condition. They have tenants that are problems. They're not doing repairs, maintenance, things like that. All of the buildings that we offer under this program include proper property management by professional organization. And even with that property management, they're still cash flow positive. And that's in the package showing the costing and everything, right? Because when you own an asset like that, you don't want it, going bad. You want it properly taken care of. And it is a business to run a 10 unit or 20 unit or 30 unit building. But with a good property manager, all you're doing is, every month finding out how much rent you made and stuff like that.
So that makes it hands off to the end buyer or investor.
Yeah, it's 95% hands off. You do your taxes once a year. You talk with the property manager now and then about raising rents and stuff like that.
Why do you see this as such a great opportunity? Because sometimes people will see investment opportunities, see the numbers and think, okay, this might be too good to be true. And it almost seems like it.
And I say you were right, because like obviously we live in a capitalist society, and that means that there's buyers and sellers of all kinds of products, and they find the value of something. And clearly, In private markets, they've said that the risk on building a building is around 30% because you need to have a 30% deposit. But it is too good to be true because it's the government. So remember, CMHC is a non-for-profit organization of the government. Their job is not to make money. Their job is not to get rich. There's not a bunch of guys running that company trying to make billions of dollars a year. They are being told by the federal government, get housing built. So they built a program that is too good to be true so that housing gets built. Because if they just said, okay, a normal loan is 30 and we'll do 25, it wouldn't move the needle, right? But they came out with a program that literally any reasonable builder or landlord can't really say no to, because we have a desperate need for more apartments and more rentals in this country. So not only if you buy one of these are you making yourself money, you're actually helping the housing crisis. You're doing a service for Canada by putting your money to work building buildings.
That's true.
Yeah, so they're directly funding the supply of housing in Canada.
In a way, yeah, absolutely. In the past, the government has tried to build its own housing and manage its own housing.
I was going to ask.
It has not gone well. Look at all the old like Toronto community housing and stuff. Problem is, government doesn't have an incentive to keep building in good shape because they're just, they're bureaucrats. If you own a building, you're going to love it and care for it and keep it in good condition and try to find the best tenants. So they realized some time ago it's much better to just make a good program for private enterprise to build the buildings and manage them.
Well, it's kind of like stocks as well, because companies will go public and they'll have investors flood in and fund their company to, invest into their other projects. So this is almost kind of like that, right?
Yeah, in a way, and especially with the way that, I like that analogy because when you invest in a stock, you don't have to worry about how the company runs. Like you buy an Apple share, you have, I almost said Tim Apple, but you have Tim Cook, who's running the company, and you're investing because him and his staff are smart and they know what they're doing. You don't have to go to meetings at Apple every day, right? So if you buy one of these buildings, it's your building, and at the end of the day, you can do whatever you want, but we put a team in place for every step of that process so that you can basically relax at home and not worry. We have the Tim Cooks building the building and managing the building and all that kind of stuff.
So to put it in perspective, in terms of returns, what kind of returns are we looking at if you compare it to, for example, like GIC is what, 4%?
Yeah, right now I think a GIC, because interest rates have come down a bit, it's probably around 3.8 to 4%, depending on how long you get. Obviously, a GIC is basically the safest thing you can invest because short of the government collapsing, you're getting your money, right? Some of the bonds that are out there are 1 or 2% return. If you look at REITs, like a REIT I've invested in many times, like a Skyline REIT, which is a great company out of Ontario, I think their residential investment is at about 4.5–5%. Their retail's at 7–7.5% right now. These projects, conservatively, you're going to be looking at least 10% on your cash. So just cash flow, right? So if you invest $100, you're making at least $10 a month. Or in real numbers, a project we were looking at yesterday, 170,000 investment is doing almost 30,000 a month in cash flow, which is closer to 20%.
Yeah.
Obviously, these numbers can change over time, but now is a great opportunity because we're early, right?
I think definitely. So just to clarify early, as I said, there's big builders who've been taking advantage of this program for a long time. What we're working together, is making it possible for the little guy, because being a builder is hard, right? So there's a lot more guys that want to be a landlord, especially a hands-off landlord, than want to be a builder. Being a builder is a full-time job, right? And you got to make sure you know what you're doing or you're going to get in trouble. So we're early in that we've found this little carve-out where we can deliver these new buildings for people who want to be a landlord without them having to be a builder. The example I had before of the guys who are builders that have a 390-unit building, they're not selling those. They're building them for them. So what we're doing is building product that is available for the average little guy, right? But I think definitely we are early on that. It's I don't want to fluff the tires, but we kind of invented this positioning in the market. And I'm sure as we have more people buying them and speaking about how great they are, there's going to be more people doing it, right?
100%.
Yeah.
And with more people doing something, usually when people conform, that's when the investment opportunity becomes smaller and smaller. So at which point do you think it's too saturated?
I don't think it'll be saturated in that there's a desperate need for housing, so we always are going to need them. I think the challenge will be that land prices will rise, right? We saw the same thing happen in pre-con. As when pre-con was going crazy in 2020, 2021, everyone was selling their land for more and more money, which at the end of the day, you know, if all your other costs are the same, it causes the price to go up. So right now we have a good spot where we can still find land at a reasonable price to build these buildings in a way that makes sense, because all of the other costs are the same. Whether the land goes up or down, the construction costs the same, right? So if the land gets too expensive, then the building can't work. The numbers won't work, it won't cash flow. And if it doesn't cash flow, then no one's gonna buy it. It won't make any sense, right? So I think we have time still, but I think we're in the early adopter phase of this. So I think there's a couple good years where guys can make really, really strong returns above what probably the average would be over the long run.
And also regarding these 10 and 20% return, they're almost guaranteed in a way because they have to go through the CMHC underwriter, or like they have to check the numbers.
Yeah. So that's another great point, Tawfiq, is it's not just like I can, you know, open up an Excel sheet and put whatever I want in there, or Tawfiq can do that, or the builder can say, yeah, like let's charge $5,000 a month for a 1-bedroom. When CMHC, you know, they, as I mentioned, they're in the business of delivering housing. They don't want to be in the business of picking up failed projects. They don't want to be in the business of power of sale and foreclosure and all that stuff. So they're not just doing a trust us bro and like taking what we offer. They look at everything. They have their own underwriters that have, you know, business degrees and everything else. They have all the statistics because they're a government organization. They know like the average rents in every city in Canada. They know the average property taxes, the average insurance costs. They have more data than we could ever have. So when we give them what we think the building's doing, they're going to very carefully go over it. Like they scrutinize it with a microscope, and they're going to tell us if what we do makes sense or if we're totally nuts, right? So obviously we're not submitting things that are out to lunch because that would just be a waste of everyone's time. So yeah, it's like you have a third party doing a sanity check on it before you actually get approved. So it's obviously nothing in the world can be 100% guaranteed. Situations change, but you know, it's about as safe as it can get when CMHC is saying this looks good, and they're very conservative.
Especially when they don't benefit from the investment itself, and they're trying to figure out exactly, like they're trying to figure out reasons why they shouldn't approve the project.
Exactly. Unlike a private bank where like a banker might be getting commissions or something, like CMHC is not doing that. They're the opposite. They're literally looking for reasons to say no, right? They don't want the headache.
Yeah.
They're bureaucrats. They don't want the headache. They'd rather say no.
I kind of want to get into pre-construction condos, pre-construction homes as well, just because obviously this is a good investment opportunity with the CMHC. But with pre-construction, I think the way the market is, we've seen that the builders are also offering great incentives nowadays. I think personally, like it's still a great entry point for a lot of first-time home buyers that just want a home, for example, in the future.
I agree. I mean, I think there's certain projects where there's crazy good deals.
And I think the builders are actually kind of catering towards the end users nowadays.
I'd say a lot more for sure, because they realized that they can't just trade, you know, imaginary paper anymore. Like now the person who's buying this thing is actually going to be living in it. So they definitely have changed kind of their tone for sure.
And as a broker of record, you're also seeing a lot of deals that are happening within the brokerage. What would you say about like assignment deals these days?
Assignments are selling if they're priced to sell. So look, we all know that, again, there's a lot of guys that bought things that were very expensive over a couple of years, and they're probably, not going to mince words on it, like they're probably in a lot of pain, right? Like there's no ifs, ands, or buts. I won't name individual projects, but we can all think of a few over, 21, 22. But I think we've seen also that a lot of the assignments from earlier projects, like 2018, 2019, those guys have done very well on closing. They've still made reasonable profits. And then the guys who are willing to take a bit of a loss, like if you're a buyer right now, there's opportunities everywhere. I think Tawfiq was just involved in a deal recently where the buyer basically got paid by the seller.
Yeah, because the seller paid, they're selling their assignment at lower than what they originally paid. So the deposit they lost was kind of given to the new buyer.
Yeah.
And they can use it when they want to get the mortgage.
Yeah.
So this way they don't have to pay 20% down. You can just pay 5 or 10%.
Yeah.
And they're getting a brand new condo.
It was kind of funny because I remember the first time we did a deal like that, and I was a little confused how to fill out the schedule with the line items of cost, because I'm like, do we put a negative number? Like, how do we actually do this, right? So I called the lawyer just to double check. It's like, yeah, you put a negative number. Like, literally, it's a reverse deposit, basically. Yeah. I mean, it's a free market, I guess. One side is getting killed but the other side, there's opportunity, right? And that's the world
Yeah.
of real estate.
Because 3 years ago it was the opposite.
Oh, yeah.
Sellers were choosing who to sell their property to and increase the price maybe like 50,000.
It's a buyer's market.
Yeah, now it's the opposite.
Now it's a buyer's market, and I think I don't know. I think prices won't drop much more. Like we're either close or at the bottom of this pricing stuff, because at a certain point, if prices go lower, all these assignment holders and stuff are just going to walk away. Like
there's no point.
There's no point. At a certain point, they'll just say sue me or something, right? But I think right now, if you're looking for like a product to potentially move into, it's a great opportunity to pick up a brand new, never lived in house for at or below resale pricing in a lot of opportunities.
Yeah.
So regarding the assignments as well, because these are brand new projects that are coming to completion, there's a carry-on warranty.
Yeah, absolutely. I think it's a lot of people don't even know when you buy a new house it has a warranty. So there's a private entity, so you're not dealing with like a builder who's going to argue with you and stuff. There's a completely separate third party. The builders pay fees into it, and then if there's any issues for up to 7 years, you get them covered. So it's a really nice sort of safety net. If you can buy 2 units, you can either buy a resale or you can buy a brand new unit at the same price right now, and you get to have that 7 years of certainty. Not to mention, obviously, you're going to be getting newer appliances and better HVAC and all this other stuff. But just knowing that for 7 years, any major issues are going to be covered, right? Because you hear all the time in older buildings about special assessments and stuff coming up and just killing people on costs.
Yeah. Another thing I want to mention about assignments, and that's what I told my buyer. The reason you're getting low price is because most of these sellers, they have a timeline of when they can sell. Like there's a deadline. So they're tight on time. So that's when you can actually have more power as a buyer. You can negotiate the price down. Where versus the resale, most owners, they have more time to sell.
Yeah, there's no time pressure on them.
There's no time pressure.
If anything, if rates keep going down, the owners will just sit and wait because they might get a higher price. But I think that's a great point, Tawfiq, and why it's important if you're trying to... Assignments are very tricky specialist deals, right? A lot of agents have no clue how to do them.
So they stay away from it.
They don't know the paperwork. They hide from it. Or if they do it, they're touching it with very delicate fingers. If you're interested in buying or selling an assignment, I think it's really important to get an agent that knows what they're talking about.
And they're all off market, so you need to have these connections.
You need to know where to find them.
Yeah,
right?
they're not on the MLS.
Yeah.
Also, another thing is you're locking in the price now, but you don't have to close until 6-8 months from now.
Yeah.
For most of the time, and interest rates are dropping.
Yeah,
so you're getting the benefit of the low price.
That's a huge point, because people are like fire selling out of fear assignments right now because of interest rates, but with a 4 to up to 8 months kind of runway on these assignments, you are kind of buying it while everyone's scared, and you're closing in a situation where no one can predict the future, but like I can say like pretty strong bet interest rates will be lower 8 months from now.
Yeah.
So someone will play this video back in 8 months and see if we're right.
We'll see.
But it's kind of like it's a huge potential advantage for that buyer, right? I mean, if they close and the rate is down in the 2s, like holy shit.
That's what I'm saying. So and a lot of people are now aware of this. They don't think about it.
Yeah.
But it's a huge point.
I agree. A lot of people don't slow down and try to like logically think it through. They just act on the emotion.
True.
Oh, the price is high, the price is low, the market's up, the market's down. But they're not thinking, how can I take advantage of the situation, right? And if you have a good agent who knows assignments, then you get to take advantage of the situation.
Yeah.
Yeah, obviously me and Tawfiq being part of Meta, we see a lot of great assignment deals come through, and we're also sending it out to our people. So yeah, if that's something that you might be looking at, then definitely reach out to us.
Yeah, talk to these boys. They know how to sell them. Most importantly, they know how to manage an assignment process, which is a much more complicated deal. And I have seen it before where a perfectly good deal has fallen apart because the agent didn't know what they were doing. Everyone was fine on the price and the terms and conditions, but because the agent was messing up the paperwork, after a certain point, one side got frustrated and walked away. So either a seller lost out on getting rid of their unit or a buyer missed out on a great deal simply because the agent wasn't an expert, right? So it's really important of any type of real estate. I think probably the most important is for assignments. I think they're the most complicated transaction.
Yeah, no, you're right. Like even the buyer I had, he was speaking to another agent, and the other agents were trying to get him to stay away from assignments.
Yeah.
Because the other agent never done an assignment deal.
But think about that for a minute, right? We're supposed to represent our client's best interest.
Yeah.
We're not supposed there was a whole big thing about steering before where people were picking projects that, either resale, going to a place with higher commission or whatever. So if you're avoiding getting someone a potentially great deal as an assignment because you're scared of it, you're essentially steering that client.
Yep.
So they might buy something resale that's not as good a deal because of your own personal limitations. How is that? How can you sleep at night doing that to someone, right? That's their life.
Yeah.
That could change their whole future, right? So I mean, I think it's really important buyers are really paying attention and making sure that their agent actually knows 100%.
Yeah, because the thing is, if they actually just decide to buy resale, they'll never find out about the assignment.
Yeah.
So that's why they actually need to know with someone who is familiar with assignment sales, because
Yeah.
they're not on the market.
I think we have these conversations every day because people obviously messaging in our groups and stuff like, I have a buyer who wants this or that, what should we get them? And we're never just saying pre-con this or assignment that or resale that. We literally say, based on what you're saying, I think this makes the most sense or that makes the most sense, and everyone is giving their feedback and opinion. And I think that's really helpful to make sure we actually try to help the buyers get the right product for their situation, right?
Yeah, I agree.
I think that's what I really like about Meta is because we do a lot of support and training in terms of actually making great salespeople, which isn't somebody who's pushing projects down a client's throat. It's asking the right questions and seeing what their long-term goals are. So especially for experienced agents too, coming here, like we're providing new opportunities. Well, you are.
Thanks.
And that we can share with our clients.
Right.
And that's part of the reason I joined.
Thanks, Andrew. I know I appreciate the kind words. And look, end of the day, sales is really about listening, right? Like you can't sell someone something they don't need, or if you do that, you're kind of a jerk. Right?
Yeah.
Like if you should find out what someone needs and then get them the best opportunity that matches that need. And everyone's goals can be different, right? There's people who are just looking for long-term investment. There's people who need an end user to move in right now. There's people who just need the cheapest thing they can find, and we just try to find the best options for people.
I just want to go back to the CMHC. There's an interesting concept you shared yesterday that I would like to talk about. The parasu.
Pari passu. Yeah.
Pari passu.
It's Latin. It's we're not doctors. It's the only word of Latin we get to say. So it's funny because I had totally forgotten about this until it came up in a conversation, but I remember actually kind of learning about it way back when I did my real estate courses 10 years ago.
Yeah.
Just like in passing and thinking, okay, well, that's cool. But essentially, what's really interesting about CMHC, pari passu is Latin for equal footing. And what they allow when you're investing in one of these projects is you can get a second mortgage with CMHC, but rather than it acting like a second, it acts with equal footing. So they're both really kind of like first mortgages at that point, which means that when you build one of these buildings, you're getting up to 95% against the cost.
Yes.
But we all know cost and value are not always the same thing, right? I mean, if the market's hot, the value could be much higher. And so what you can do with CMHC is basically any time after the building is done, if you can get an appraisal that's higher, which could be, a little bit higher, or in some cases a lot higher, you can potentially refinance by adding a second mortgage, but it's equal footing to pull out to 95% of the value. So, and because it's equal footing, the interest rate will either be the same as your first mortgage or very, very close. So a lot of people are scared of second mortgages because they'll be at like 10% or 12% interest. But if your first mortgage is at like 3.5, your second mortgage could either be at 3.5 or maybe it's at 4. But either way, it's so close that overall it's very good, right? And imagine a scenario, really simple numbers, and it might be a little complicated to explain it in for a podcast, but imagine a scenario where you buy a $4 million building and you need a $200,000 deposit, right? When that building is done, say it gets valued at $5 million, you can then, if the rents support it, get 95% financing, which means that you can get, that's a deposit of $250K. Right? So that means in theory, you can get a mortgage for $4.75 million on that building.
Yeah.
But you only put in $200,000 initially. So not only would you get, because you've raised the value by $5 million, okay, you can pull out that extra $700,000 and $50,000 from your original deposit. So now you own this building and you've taken $750,000. So not only do you own the building with no money in it, but instead of your initial $200,000, you now have $750,000. And obviously, I'm talking about a theoretical perfect example.
Yeah.
The real world, obviously, the biggest factor is can the rents cover that extra mortgage? But if interest rates drop, then certainly they can. So what a lot of the very wealthy and powerful of this world have done is they just keep doing that over and over again. And you can literally start. I can show you the math. with a 10-unit building, and within 10 years you can own 100 units without actually spending any more of your own money other than the first deposit. So at the beginning of this, when you were talking about building wealth instead of just like, building a retirement nest egg or something, once you have 100 units, you're a bit of a major deal. Like, if you let first of all, 100 units is going to be worth at least 20 or 30 million, even in the weirdest neighborhoods in Canada. And in certain areas, it could be worth 50, 60 million. But also, once you've paid those mortgages down a bit, your cash flow on that could be more than $500,000 a year, depending on the area. So suddenly it's not a nest egg. It's not something for my kid. It's a business, right? And that's what all these guys from the 60s and 70s have done. Like, they weren't geniuses. They were just guys that understand how to refinance.
And the power of leverage.
Yeah,
the power of leverage. And you don't have to wait many years to refinance and do, like, as soon as the value goes up, you can.
Yeah, you can do it any time that works for you after the building is completed, basically. So that could be the same day it's completed, or it could be a year later, 2 years later, 3 years later. You pick, right? So, I mean, you could be doing it based off of if, values went up a lot. You could be doing it based off of if the interest rates dropped a lot, whatever makes the most sense at that given time. And yeah, that's, again, that's just how people have built real wealth over the long run.
And the interest you get with these CMHC deals is 10-year fixed?
You can do up to 10 years. I always say up to 10. Some people want 5 years if they think the interest rates are going to drop. But I would, and just to clarify, we're talking about the term, right? So in a normal mortgage, you're thinking like a 25-year amortization, 5-year term, or someone does an open variable one. With CMHC, they will allow you to lock in your interest rate for up to 10 years, which in my opinion, especially now when rates are dropping, it's a great time to lock it in. Some people are like, oh, but what if variable rates go a little lower this year or that year? I'm like, yeah, but your building is cash flow positive and rates are pretty low. You're in the 3s, potentially even into the 2s. It just gets rid of all your risk, right? For 10 years, you're not worried about what if in 5 years rates go up to 10%? You don't have to worry about any of that. You're sitting happy with your 3.5 or whatever you have. And by the time 10 years is up, if you've paid off a chunk of that mortgage, even if rates go up, you'll be okay. Or the rents have gone up so much, then you'll be okay. So remember, CMHC's job is to get houses built. And they want to make that as risk-free as possible. So they do everything they can to make it so that, if you want to be a landlord, you can do it with the minimal headaches, basically.
So I'm sure some people are thinking, what would be the exit strategy? I would say, like, you just sell it, right? You sell the building.
Yeah, I mean, multiplex buildings are very sought after assets. There's 1 million people out there that want to own them. On the smaller buildings, it's more just sort of mom and pop size investors who want to get their foot in the door. On the larger end, there's REITs and stuff that want to buy these things. But there's so many people that want to buy these. And that's actually another reason people are interested in building them, because it's actually hard to buy them. Whenever a good building comes up, there's 1 million guys that all put in offers. It's like a bidding war. And it can get bid up so high, it doesn't make any sense anymore. So one deal we did recently, the guys were just frustrated. They'd done 6 offers. And this is not like a house where you find a new house every day. Every building, they had to find one. It takes months, and then they have to do their analysis and all this stuff, and then they lose to someone who can just spend a little more, right? So being able to buy them new makes it, none of that headache. But in terms of selling, it's very easy to sell them. Usually those mortgages are assumable as well, so the new owner can take that mortgage if they want, which typically is a great selling feature, right? When you tell someone you can get a 50-year mortgage on a building, they're like, sign me up.
Yeah, and to be clear, so these buildings, they're still it's a pre-construction.
We're selling them as a pre-construction opportunity. So that's that kind of unique spot we found, is we took our knowledge of apartment buildings and CMHC, which is a hard process, and then we took what we know about selling pre-construction, which is not an easy process, but it's very well designed. It's been, for 20, 30 years, people in Toronto have been perfecting that sales process. We said, why can't we sell an apartment building the same way? Yeah. Where it's, here's what you get. It's a fixed price. You don't have to worry about anything. The city, the consultants, the construction, and then in a few years, you get your shiny building with your keys.
It's the best of both worlds.
Pretty much. I mean, obviously, in reality, these are complicated deals and they require a lot of, we have to sit down with every potential buyer, but we've tried to make it as smooth and easy as possible.
I find, so most of these projects are in Alberta.
Yeah.
What's the reason why not in Ontario or
Yeah, so I mean, look, obviously CMHC offers this program anywhere in Canada that needs housing, and
Yes.
if you look overall, they're building everywhere. But we are primarily looking at opportunities in Calgary, Edmonton, and now a little bit in Kelowna as well. It's just honestly easier to do business, and I don't want to get too much into politics here, but it's much easier to find land. It's much easier to get approvals with the city. There's less overhead and costs and fees and other things that rack up expenses. So when you end up trying to run the numbers on these things to see if they work, it's just so much easier to make them work there. So, we're trying to do our best for the client, and we're trying not to pull out our own hair. We just find it's easier to do business, right? And there's some other advantages with Alberta as well, which I'm sure you've talked about before, but they have a much more balanced tenancy program.
Yes,
You don't have to deal with tenants that are stuck in your house for 8 months and that kind of thing. You can take a reasonable security deposit for damages and whatnot. So, I believe tenants should have protection and rights too. It's their house, but what we have going in Ontario is not fair to anybody.
It's ridiculous.
It's bad for everybody
Yeah.
when it takes 8 months to evict someone who's destroying your home, right? And so you don't have those problems in Alberta.
I agree. It's more landlord friendly, and then as you said, cost. Like for example, no land transfer tax.
Yeah, so all those costs, I didn't want to go too into detail, but
Yeah.
you don't have development charges, you don't have land transfer tax. There's a whole other set of fees and costs that just don't exist, right? And the way I explain it to people is you can only rent space. So in Ontario, if 20 or 30% of the cost of a new house is fees, I can't rent fees. Whereas in Alberta, 95% of the cost is the physical space that you're renting out. So the amount of rent you can charge against your cost of building is much better over there.
So it makes more sense.
It
to do
makes
in
more
Alberta.
sense. And we do projects in Ontario. We have a great little 12-plex in St. Catharines right now. The numbers are beautiful,
Okay.
but if you compare it to a similar project in Alberta, they're not as good.
Yeah.
So for someone who wants more local, maybe it's more comfortable for them, or they think, Ontario is like the blue chip,
Yeah.
then it's a great
yeah.
project. But if someone acts in a more business-oriented way and says, I want the highest return I can get, well, how can you deny it, right? It's just the numbers are better.
Yeah. Also, other benefit is they have lower corporate tax in Alberta.
Yeah. So you're owning these in a corporation, and they have the lowest corporate tax in Canada. So
Yep.
just across the board, it's just easier and
Yeah.
cheaper to do business there.
Yep.
There you have it. 1% Club. We love talking about money, sometimes politics, but
No
it's
politics.
more so like having like-minded investors and people who want to build more wealth for themselves and do better in business and life.
Yeah. And if
100%.
anyone interested in these kind of opportunities, you guys can just reach out to us.
Yeah, any investors DM or call or contact us. And then if there's any agents out there that are struggling to do business as well, obviously we have great opportunities at Meta. And why pay exorbitant fees when you have to ask yourself, what's your brokerage doing for you?
Thanks,
Love it.
Andrew.
Yeah. Thank you so much.
Thanks
Jake.
for having me on again, guys.
Yes.
I love
Yeah,
being here.
We'll have
Yeah.
you here again.
This was
Awesome.
great. See you guys
Till
on
next
the next
time.
one.
Thanks, guys.